Hello and welcome back to the Blockchain.com podcast. My name is Garrick Heilman. I'm the head of research at Blockchain.com and a visiting fellow at the London School of Economics. Today, I'm joined again by Blockchain.com co-founder and vice chairman, Nick Carey. Nick, welcome back.
Hey, thanks, Garrick.
So as part of our Crypto Basics mini-series, today we're talking about crypto wallets, and particularly the features and benefits of non-custodial wallets. By the end of this episode, you'll know what is a crypto wallet, how crypto wallets work, and the importance of Blockchain.com's non-custodial wallet, which we'll refer to as the private key wallet here in this episode. So first, Nick, let's kick it off with what is a crypto wallet?
Great. Well, I'm glad you asked, because anyone that's interested in cryptocurrency is going to need to learn about crypto wallets. So there are a lot of different ways to describe how these tools work, and we're going to go through some of that today. But in some ways, a crypto wallet can be best thought of almost like a password manager. And so the core functionality of a crypto wallet is actually to store something called your private key. This is like a secret that lets you keep your cryptocurrencies safe and accessible. So broadly speaking, wallets are basically the tools and the user interfaces you need to interact with public blockchains. So in other words, wallet can generate the necessary information that you're going to need to send, receive, spend cryptocurrencies like Bitcoin and Ethereum. So let's get into some of the nitty gritty here because there are actually different types of wallets. You're going to hear about hardware wallets, paper wallets, and then online wallets or software wallets. So cryptocurrency wallets generally can be classified as either being hot, meaning they're connected to the internet, or cold and therefore offline. And they're different sort of, I would say, security and usage trade-offs between hardware and software wallets and hot and cold wallets. So we're going to go through those. But I want to explain this kind of with real-world examples because in the real world, you can take cash from an ATM and stuff it in your pockets, or you can organize your payment instruments like your cash and checks and credit cards inside a leather wallet or a purse. You could install a safe in your house, or maybe put your funds in a safe deposit box at your bank. So crypto also supports a huge variety of different storage solutions to meet a bunch of different kind of needs and I would say advanced levels. So for a lot of people, a regular wallet that you download from the App Store is probably going to be just fine. But if you're more an advanced user, you can get a hardware wallet and actually store your crypto and your private key on something that looks like a USB stick. So it's really only something that advanced users should explore. But a hardware wallet is also a very secure format in many ways. So in conclusion, what is a crypto wallet? A crypto wallet is what you need in order to do things like send, receive, and spend cryptocurrencies. And you can download them from the App Store. You can sign up for them online. You can buy hardware wallets, and you can even memorize phrases if you wanted to do something super sophisticated. But at the end of the day, you'll need to start your crypto journey with a crypto wallet. And Blockchain.com has the world's most popular crypto wallet. And so we're going to talk a little bit about what makes the Blockchain.com wallet so special.
Yep. Thanks for that introduction, Nick. And you mentioned a number of terms there. And one of the things that cryptocurrency newcomers often struggle with is all the new jargon, all these different terms, hardware wallet, hot wallet. The one thing I just wanted to mention is in addition to the different types of wallets you mentioned there, the distinction between a hardware wallet, which is a physical device, and a hot or web wallet like the Blockchain.com wallet. We also have these terms that are sometimes used to describe the same thing. So non-custodial wallet, you'll sometimes see alongside self-hosted wallet or private key wallet, which is our name here at Blockchain.com for this non-custodial wallet where the user has full control. So the message I would just want to give to newcomers, listeners here is that if you're a little confused by all the jargon and the new terms, hang in there. It'll become a little easier over time. And just know that a lot of times you see all this new jargon because when you have something new and innovative like cryptocurrency and the ability to actually hold the value in your full control, an incredibly innovative and powerful concept, we often come up with different terms in the early days to try to describe this same thing. So hang in there for anyone confused by the jargon. But Nick, let's now turn back to you and talk more about how crypto wallets actually work.
Okay, great. Yeah, it's a journey to get that sort of vocabulary when you're describing something new, and take some time, I would say, for the keywords to kind of become harmonized and their understanding to be codified. So, how does a crypto wallet work? So, when you sign up for a wallet, like by visiting blockchain.com or going to the App Store and downloading a wallet, in the background, after you put in your email address and your username and a password, what's happening is that two special keys are being created: a public key, which is sort of like an email address, and it usually looks like a QR code, and then something much more important, a private key, which is a long randomized string of letters and numbers. And basically, you can think of the public key as an address or a location on the blockchain which coins can be sent to. So it's just like the email address. You can share it with anybody you want, and then anybody can send you an email. You can share a public address for your crypto wallet, and anyone can send you crypto from anywhere in the world. And different blockchains have different address formats. So there's an address format for Bitcoin, there's an address format for Ethereum, and that'll make sure that when you make a transaction, the transaction will go to the right place. The important part is, though, you can share your public address with absolutely anybody, and it's super safe to do so. And then they can send you funds from anywhere in the world. But it is extremely important that you never, ever, ever disclose your private key to someone. Now, most wallets will conceal your private key in settings so you don't accidentally disclose it. And so that's how those wallets are basically set up. And you can think of that private key like a password that unlocks your ability to send crypto from your wallet. So you never want to share that private key with anybody. And many wallets will make it possible for you to actually back up your private key in the form of something called a seed phrase. But all you really need to know about that is it's basically a 12 phrase or an 18 word phrase that you can write down, store in a safe, keep in a safe place. But again, you never want to share that private key or seed phrase with anybody. And it's really something you want to be extraordinarily sensitive with. Sharing that private key is basically like giving someone the keys to your safe deposit box or your house. And so you want to be extraordinarily cautious about sharing your private key. But when you set up your first crypto wallet, all that kind of happens in the background. The wallet is really there to provide you a convenient and easy interface to do things like buy, send, receive, and then pay for things with crypto. And so while we use in the background private and public key technology, it is important to understand that the wallet will basically put all of that in a clever interface so you won't have to worry so much about it.
Yep. Yeah, that seed phrase is such an incredibly powerful and important tool for securing and backing up and creating peace of mind when you're storing and controlling your own funds. You can make multiple copies of your seed phrase. You can shard it, as we say, or actually slice it up so it's not stored in a single location. You can go to pretty extreme measures and put them on multiple continents, and there's all sorts of creative ways you can kind of store your seed phrase depending upon the level of security and peace of mind you're looking to achieve. So, Nick, let's talk a bit about signing up for a service and buying crypto that you don't own. This is called a custodial service. Now, it's a little, I think, confusing here, right? The idea that, well, I don't really own this. We hear this expression, "Not your keys, not your crypto." Talk to us a bit about kind of the distinction between custodial services and what this episode is mostly focused on, non-custodial services, where people have full control of their funds.
Yeah, so the best way to think about this really is kind of in the analog world, a physical purse or a physical wallet. And you can put things in there like your cash, your dollar bills, your euros, your pounds, and then you can pay for things in the real world. And when you make that payment, the settlement happens instantly, and the person that you make that payment with takes your money and they can go spend it somewhere else. And that's kind of the concept of a non custodial wallet. You're firmly in control of doing what you want with your money. And that's kind of always been the point of crypto, was to decentralize and disintermediate third parties and merchant processors and banks. And so you're really relying on sort of a global peer-to-peer transactional network to make payments over the internet. Now, a lot of service providers will sell crypto, but they're actually just sort of a broker or a custodial service. So you can kind of think of that like an e-trade or maybe even some of the more contemporary service providers like Robinhood, where you can sign up, you wire money into this service, and then you can buy some crypto. But that crypto actually can never leave the platform. You can't use it as a payment instrument. So this is why it's really important to have an understanding of these concepts, because if you ever need access to those funds, they're actually stored with somebody else, that third party. And so, there may be good reasons to do that, and some people prefer that relationship, and they think of that more as an investment as opposed to maybe an instrument that they want to have control and custody over and be able to do with as they please in their own schedule. So the difference between sort of a wallet where you are firmly in control of your funds and then an account where somebody else is pretty significant. And so, most major crypto companies, by the way, sort of offer a spectrum of different services. They may include an exchange where it's a centralized venue for buying and selling crypto, but then allow you to move your funds off the exchange into a wallet that you firmly control. Regardless of which direction you head in your journey in using crypto, it is so important that you always make sure you set up very strong passwords. If there's an option to use two-factor authentication, you really should do that. And if you're going to go off piste, make sure you're relying on a company that is extremely reputable, that has a track record of high quality security and customer support. It is important that you be very cautious, especially if you're using a centralized service. In the history of crypto, there have been some very famous cases, including the Mt. Gox, where a centralized service was fully custodied and had a major compromise. And a lot of the users at the end of the day were not able to gain access to their funds. So having custody over your funds is really one of the major, I would say, features of cryptocurrency. And the settlement and clearing of all the payments happens on these public ledgers that are all over the world that anyone can interface with. So basically, you can make payments over the internet using your wallet. That wallet really is your passport to a whole bunch of super exciting new financial services that are accessible to basically everybody. The non-custodial wallet, the private key wallet, is a really critical piece of tooling you're going to need to navigate the crypto world over the next decade.
Yep. And one thing people might wonder is it either or? Do I have to use non-custodial or custodial? I think what many people who have been in the crypto space for a while end up doing is using both in different cases for different circumstances. So it's not like you just have to pick one or the other. There may be times when you want to have more of your funds in a non-custodial wallet that you fully control, versus times where you're having more of your coins on an exchange, where you're interacting or using them more regularly. That's, I think, not uncommon for people to use both. It's just really important, as Nick mentioned, to understand what it is you have and why you're using a particular approach. So let's, Nick, talk about this commonly tweeted and heard expression, especially in turbulent times like the ones we're in right now: not your keys, not your crypto. What does that mean? Why is that important?
So basically, not your keys, not your crypto means if you don't have control and custody over your private key using either a self hosted or private key wallet, then ultimately someone else actually has control of your money, a third party, and therefore they can restrict the usage of it. They may prevent you from accessing it. There may be all kinds of circumstances where you may want to gain control over that and be unable to do so. And so the point of not your keys, not your crypto is sort of a perennial reminder to especially new crypto curious people that are coming into this for the first time and learning about these concepts and the differences. And so at the end of the day, we encourage everyone to look at the spectrum of services from fully non-custodial all the way to exchanges where you're relying on a third party to manage control over your funds, and understand the spectrum of risk. And ultimately, self custody or having control over your own assets is incredibly empowering for people all over the world that have had their funds raided by banks. Or have seen capital controls prevent them from accessing their savings. Ultimately, self custody or control over your money means that you are the one who is in the driving seat. You can bank yourself. is a very powerful idea, especially in parts of the world where financial services have not been a good steward of trust. So at the end of the day, in a situation where you are in control of the custody of your own private keys, the risk is just on you. And so that's kind of the difference. And ultimately, private key wallets and non-custodial wallets basically don't rely on a third party. It interacts directly with the public ledgers. You can make a payment to anybody else anywhere in the world with their public key, and that's it. You're in control over your financial destiny and control over the assets that you've earned and worked hard to have in your possession.
So this is a great time, of course, to talk about the blockchain.com private key wallet. Not every major crypto company offers or supports a non-custodial wallet like we do. It's very much at the heart of our company. It's certainly, I know, something that our staff, I personally take a lot of pride in, knowing that we have dedicated so much time and energy to supporting and empowering our users to hold and control their crypto assets. Nick, tell us about the blockchain.com private key wallet.
Yeah, thanks, Garrick. So, blockchain.com has built the world's most popular crypto wallet, and that crypto wallet is a private key wallet. It puts users firmly in control of the funds that they have in their wallet. And to us, that is a most important tool we could have provided to the cryptocurrency community. It was the very first thing we ever built, and over 85 million people from over 200 countries around the world have tried it. It's 100% free, and anyone, regardless of where in the world you were born, can download it from the App Store and create a wallet online. The private key wallet is basically like your passport to a universe of all these exciting emergent digital financial services. And if you want to get into cryptocurrencies, you're going to need to have a wallet, and the blockchain.com wallet is by far the most popular one in the world. So one of the things that we always wanted to do was stay really true to some of the founding principles of the first cryptocurrency, which was Bitcoin, which was designed to be a peer-to-peer electronic cash system for the internet, making it possible for people to send precious information over the internet and make payments quickly and efficiently at scale and affordably. And now the blockchain.com private key wallet or blockchain.com crypto wallet has lots of different cryptocurrencies in there and really exciting new features. We're launching an NFT marketplace in the very near future, among quite a few other things. So, if you haven't started your journey down the rabbit hole of crypto yet, definitely encourage you to start by getting a wallet from a trusted provider, and we hope you consider blockchain.com.
Thanks, Nick. Thank you for listening, and we hope you enjoyed the episode. And if you're enjoying our podcast, please rate us and leave a review, as it really helps boost our visibility to more listeners. Also, if you have a topic you'd like to see us cover, please get in touch at the following email address: podcast@blockchain.com. Once again, that's podcast@blockchain.com.